Hey traders, Steve here again from Option Alpha. Today's video I want to jump in quickly and just share with you some of the live bots that I've been running that I've automated from some trade idea setups. Now in the last video I discussed some of the personal insights and key takeaways that I've had from analyzing my performance in trades over the last year, and then specifically the last few months when I've really narrowed down my focus to just running a couple of live trade ideas bots. So I promised that I would share those bots with you. So today we're going to do that. We're going to dive in and I'm just going to show you the basic setup that I have going and sort of my thought process behind that, and dive into some of the research that we've been analyzing that we just had published a few days ago and how that's sort of informing my decision. So I'm actually going to start there, right? So you can see I just have a couple of bots running. All I did was go into trade ideas. I set up some specific filters. I'll show you those here very quickly. But what I wanted to discuss was this bot that I have running here. Now you can see really the key difference between these bots was just the days to expiration that I preset into my trade ideas action. Now they run on almost the same tickers and pretty much the exact same criteria, right? I'm looking for high probability trades, positive expected value, with smaller position sizing. Now what I did do was I changed the days to expiration when I entered those trades. Now my thought process, my personal idea, is that I like to look at diversification not only across tickers and sectors and things like that, but also across date ranges. Right? I like to have some longer term trades in play and some shorter term trades. And one of the main reasons for that was to sort of maybe smooth out that variance and also to get my trade count up. Right? If I'm getting into shorter term trades, I can get in and out of those trades a little bit quicker. Well, then we started looking at some of the research. And if you haven't had a chance to do it, jump over and make sure you read the newest Research Insights blog that was published a couple days ago. I'll share the link down in the comments. But Rob and the team did a great job of really breaking down how days to expiration are impacting the realized results versus the pre-trade probabilities and expected value and return on risk. So overwhelmingly, it came back that 20 days to expiration was a pretty significant threshold, right? You can see here in the meat of the trades, everything over 20 days to expiration was tracking that, quote unquote, perfect EV line very well. You can see the same thing with alpha and return on risk. When we keep it down into sort of a reasonable range here, they're all tracking great for those trades above 20 days to expiration. So I looked at that, and as much as I love my theories and my ideas, I trust data more. And now that we're up near 2 million trades that we've analyzed, this is something that I'm definitely going to use to inform my decision. So officially together here, I am just going to go ahead and turn off this bot that was looking only for trades between 7 and 20 days to expiration. Now I know this is maybe sort of contradictory to what I shared in my last video, where my goal was honestly to just let these bots run, let them go for a while, and I'm all for that. I want to stay out of the way for the most part, let the bots do their thing, find the high probability trades, and then let them manage it. But if I'm getting data and research that's showing me that 20 days to expiration is having a verifiable impact on how those results are coming back, I'm going to implement that into my trading. So I'm just going to do away with this one for now. It has a couple positions open. They're being managed by my exit options, so I'm not worried about that. And I'm going to focus on this other trade ideas bot, which, like I said, is pretty similar setup, except I was looking at a little bit longer time frame. Now, if you look at the closed P&L, it is actually performing a little better. I'm not going to look too much into that. Maybe that's a little bit more of just a conversation piece because the trade count is relatively low. But if we jump in and we look at the positions and we analyze these since they've been running, it's done pretty well. We only have 16 positions. So I'm not going to sit here and tell you that this is the magic trading strategy. We're still pretty early. Been running it for, almost 2 full months. So some decent numbers. One thing that I did notice, it's been opening a lot of short call spreads and iron condors, which earlier in that cycle, before this sort of crazy little run-up we've had, that was having a good impact, obviously, because we had a lot of bearish trades paying off. So will be interesting to see how that works going forward. And to be honest, it really hasn't opened a lot of trades recently, right? I have a trade 9 days and 13 days, and I haven't had anything open since then. And We discussed a little bit of this recent market run-up in that blog I shared with you there. And I'm also going to dive into this in my next video because I'm actually looking at opening a few more positions manually through trade ideas that maybe are looking at trades that aren't actually in symbols inside of my automation. So if we jump into the automation, we go, all I did, like I said, was I went into trade ideas and I set up some very basic filters. And a lot of this was based on that research that had already been published. And then removing that bot earlier was just kind of following along with the research as we continue to update it every few weeks. We get more trades and more data points. I gain even more confidence in what we're doing and let that inform my decision making. So I'm looking at a few symbols. One thing I do want to explore going forward, and we'll share this together, is how to diversify those symbols. I think it could be in my best interest to add more symbols, potentially have an ETF bot and a stock bot. We're looking at some correlation things like that. So it'll be interesting to see what we do there because it is pretty much centered in some index and high sort of beta ETFs. So I want to kind of work my way away from that. Now, pretty simple setup, 30 to 45 days. I only run one contract right now. I'll show you below how I control the risk on that. Some simple entry criteria. I just don't want to double up on symbols, right? So I don't want a bot opening 5 trades in SPY and none in my other tickers. So I tell it it can open 1 per symbol. And then my criteria is pretty straightforward. You know, based on all that stuff that we've been looking at, right? What we have had as the main takeaway from that research is we're looking at positive EV trades, we're looking at positive alpha trades above 20 days to expiration with a probability of profit somewhere in that 50 to 80% range. So I let that sort of drive this. And this is how it's been set up since it's been running. So all those stats that we saw earlier, it's the same thing that we're looking at here. It's been running the same trade setup identifiers. I have alpha at greater than 10%, EV at greater than 20, which I might actually scale down a little bit in the future because the data is showing that anything positive EV is returning pretty good results. So I might actually want to lower that a little bit. That might help me get into a few more trades because if I'm looking at these longer time frames, I might not be getting into as many trades as that shorter duration bot. So I might actually just lower some of these, but keep it positive and still focus on high probability trade setups. Okay, so then if we look at our probabilities here, we can see I have the probability of profit at higher than 65%, probability of max profit greater than 50%. So every trade I get into, I want positive expectancy, and I want a better than 50% chance that I'm going to get that max profit, and then less than a 30% chance of getting a max loss, right? So I'm sort of balancing out those probabilities in my favor. I want to keep my max loss at less than 300. I want to make sure that I'm getting at least 100. That helps build out my reward risk pretty well there. And then I just rank them all by alpha. And that's really all it's doing. You can see I did add a couple of other decision modifiers in here. I like the idea of laddering into my trades. And if you haven't been following along with Kirk's Pure EV videos where he focuses on opening all these trades in his portfolios, he shared a similar thought, so I encourage you to go and catch up with those if you haven't been watching. But my idea here is since I have a lot of those high beta tickers, right, and those index ETFs, I don't want to just stomp on each trade day after day after day. I want to give the market a little bit of room to breathe, if you will, so I try and space these trades out. Now again, as I said earlier, I might have to think of ways to get into more trades because I want to increase my trade count, right, to maximize those probabilities. So we're going to work on that together going forward. Would love to hear if you have any input on that as well. The only other modifier I put in here was I like to open the trade a little bit later in the day, kind of let the volatility die out, and then I avoid opening trades on Fed days, right? The day before Fed day, the day of Fed day, the day after. I don't worry about it as far as managing the trade around that. I just don't want to open it on those days because price, where it is 1 hour ago could be drastically different than where it is 1 hour from now. So I kind of like to avoid that as best as I can. But really that's all it is, right? It's a very simple setup. We haven't been getting in quite as many trades recently as I discussed, so we're going to look at that in the next video of how I sort of like to leverage trade ideas to manually open positions, especially in this low volatility environment where we're not getting as many trades that meet that criteria. But that's the key, right? I'm not going to compromise my criteria to get into more trades. That's something that I think I kind of struggled with in the past When I only have such amount of time to get into trades, I want to get into them. And hey, maybe if it doesn't meet my trade plan, maybe we push that trade through anyway. So no, I don't want to do that anymore. I have a very strict setup, which I've used the data from our research blogs to inform that setup. And then if it's not opening trades, it's not opening trades. And then I can easily jump over to trade ideas and find some trades that aren't in those tickers that I have inside my bot to potentially get me some more trades, diversify across different tickers. So next video, we'll dive in next week. I'll show you how I do that. That'll be fun. But thanks for coming in today. Make sure you check out the research blog in there. Be sure to follow along with Kirk on his Pure EV bot journey as well. And we'll see you all soon. Happy trading.